Thank you so much, everyone, for joining us for Financial Fridays. Ask Me Anything. Today, we're going to be discussing investments or how to invest. And I'm honestly, I'm just going to pass it over to Yumika, who's going to be leading our conversation for today. Yumika.
Hi, thank you so much, Maya. I appreciate it, and I thank you all for joining us. I am Yumika Jones with the Mississippi Center for Justice. I'm located in the Delta's office in Indianola, Mississippi. We have 3 offices, one in Jackson, one in Biloxi, and of course, the one here in Indianola. I work in the Consumer Protections Division, along with Max Myers, who is our Director of Consumer Protection, Brittany Perkins, Ty Pinkins, Charity Bruce, and Swan Lutzenberger. The first thing what we're going to be talking about is investing. So one of the first things I recommend is that you educate yourself on investing. Please educate yourself because you'll need to know and understand the terms and what they mean. For example, if I'm investing, I need to understand what a capital gain is, what a capital loss is. I need to know what type of account I've invested my money in, if it's a high yield savings account or a certificate of deposit. Also, am I going to be doing dividend stocks or individual stocks? So, and I will also want to know, like, what are my rate of returns on that? How long am I investing? So those are things that you need to educate yourself on, because an investor's goal is to make money on their investment. So you need to make sure you're educated so that you can make an informed decision on what it is that you're getting. So some of the questions that we got, one of the things is, what are some things you can invest your money in to get a decent return? And so there are a couple of things that we did some research on. Most common is a high yield savings account. And that account, you can get it at a bank or a credit union. And it's a good alternative to holding cash in a checking account, which typically pays very little interest on your deposits. The bank will pay interest in a savings account on a regular basis. So savings accounts are insured by the FDIC. You want to make sure that wherever you're holding your money, that there is some type of security there in case there is a loss. So the Federal Deposit Insurance Corporation, and I know you've probably seen those stickers on the window when you go to the bank drive-through or different things, the FDIC, that insures it. And if you have your money in a credit union, they have the National Credit Union Administration who insures your money that's held into those high yield savings accounts. Another thing is the money market account. And these types of accounts are bank deposits that usually pay higher interest rates than a regular savings account. And though they typically require a higher minimum investment, they're also insured up to $250,000 per depositor per bank. So like a savings account, the risk for money market account is much lower. It's not a high risk for that. Another thing that we looked at was short-term U.S. government bonds, which are like corporate bonds, but a government bond are money that's insured by the U.S. government and its agencies. So those investments like T-bills or T-bonds, T-notes, or mortgage-backed securities from those federal agencies are a good way to invest your money. Those bonds are considered low risk as well, because by being insured by the federal government, those agencies, although they're not backed by the FDIC, the government's promise to repay your money is much higher. So I would invest in something like that to get a decent return. Another question was asked is, if someone had $25,000 or something to invest immediately, what would we recommend investing it on? So for myself, I would say it depends on the amount of time that you're looking for a rate of return. If you're looking for your money immediately, or like a year or 2 years or something of that nature, then I would place my money in a CD if I'm looking for it for a year or 2 years, because when you buy CDs from the bank, they're basically given out in terms of years. Another thing that I would look into is a money market mutual fund, but do not confuse that with a money market account. Even though they're probably same well, not same, but named similarly, they are very disparate and the risks are very much different. They are both good term, short-term investments, but the mutual fund, you'll pay an expense ratio to the fund company from the assets that are being managed. And while they're generally safe, money market funds are not as safe as money market accounts, which are FDIC backed. So in contrast, money market funds can lose money, but they are generally quite safe. Another question we had was if we recommend using third-party apps such as Acorn to invest. And I would say that it's typically safe to invest in those things such as mutual funds through the mobile apps. The money cannot reside with those entities, nor can they keep that money to themselves. So I know most people that invest in like Acorn, they may have where it rounds up. So for instance, if you spend $5.27 in the store, it'll round it up to $6 savings that you save into your Acorn account. I've seen a lot of people who use that and they have said that they're very much interested and satisfied with it. But I would still recommend that you do your research on it just to see if that's something that you would typically want to put your money in. And also look at your timeline and see if that's a good rate of return, if the rate of return or the timeline is what you're interested in. And if it's what you expect, then okay, yes. But do your research on those different apps just to make sure. But one thing about it, it's easy to see your money. You can keep up with it. You can go on the mobile app, look at it and see, how much you're making and how much you're earning, and which is a good thing. So over long periods of time, you may have trouble keeping up with inflation using that, but it's a good tool to use to kind of see how your money is doing. Any questions so far?
I did have a question. I know currently a lot of people are starting to invest in like Bitcoin, those forms of currency. And it depends on your background in investing on whether you want to invest in that. Do you have any recommendations or from your perspective or your knowledge of that particular industry, do you think it's worthwhile for people to try to invest into that particular form?
Okay, so what I would do with cryptocurrency, I would definitely get with an investor to talk about it. And I will also, if you have a tax professional that you deal with, I will speak with them in terms of that as well, because a lot of people got into it, but did not realize that those things will have to be reported as income on their tax returns. So it's wise to make sure you get with an investor to see what the risks are, what the rate of returns are, and how it's going to affect you at the end of the year when you get ready to file your return. Because those are just some of the things. And it is very popular. It became very popular back in when we started going through the recession. A lot of people got into that, the EFTs. That's what they were calling it, the EFTs. Let me see if I think I got something right here on it, where they were talking about EFTs. Hold on 1 second. But I will get some more information on that and get it to you so that you can share it with everybody. But one of the other things is asked about the investment philosophy and how would you go about doing that. So my advice on investing would be to get in and get out, and don't allow it to be something you're attached to over a long period of time. And don't become so attached to that investment that you can't see when it's best to sell out your money. Oftentimes this can lead to losing money or waiting to gain that money back. You put your money in and you're like, okay, you lost something, and you're like, okay, well, I need to see how long it'll be before I get this money back. And a lot of times your stock becomes so bad that you can never climb out of it. So you want to make sure that you are educating yourself on what your capital gains and losses are. Look at those percentages and get with a good investor to make sure that you're making some of the best moves that you can make with your money. And that leads us to the last question and asked about what questions should you ask an investor if you're going to be doing investments. So one of the first things I would ask is if they're certified and how long have they been investing. That's one of the main things that I would want to know. What is their level of education and knowledge about investing? And I would ask what their portfolios look like. What other individuals have they dealt with, or what other companies have they represented, or even if I'm investing in something, is it something that they've invested in as well? Those are some of the questions that I would ask. And I will also want to know if I'm making a good investment on whatever I'm investing my money in, and what kind of risks are there? Do they see any risk long-term or short-term? Do they are they advising me that this is a good stock to get into if I wanted to get into this stock or purchase that cryptocurrency or Bitcoin? I would ask them those types of things. I would want to know, have they invested in the same company before, or are they currently investing themselves? Those are types of questions that I would want to know, so I would feel comfortable with working with them so I can make the best decision if I'm going to invest my money, my hard-earned money, into a particular product, program, or company. Those are things that I would want to know. But you still have to know that whenever you're investing your money, there's always a risk, some level of risk in there. It can be depending on how fast your money will grow. If you're going to lose any money or none at all. If you invest money, are you going to make more than what your initial investment is, or will you be losing money? You want to look at taxes, inflation, what the market conditions look like, and any other external factors that can affect the value of the money that you're investing or into that investment.
And I would just also add on, not necessarily a question, but as you are meeting with potential investors, just make sure that how they are communicating with you is something that you can understand, because you would hate to get involved in any kind of contract with them and not really understand what kind of situation you're involving yourself and your money in.
Absolutely. And that's why I said from the beginning, make sure you educate yourself on what the terms are, because I can speak some language jargon to you and you may not even understand what I'm talking about. So it's good to know what a rate of return is, what high interest, high yield rates are, what capital gains are, what the percentages are. Those are terms that are thrown out easily and you may think you understand, but it may have a whole different definition. So you want to know what type of investment you're making, if it's with CDs, for instance, or the money market funds, if it's a corporate bond, if it's a government bond, mutual funds. You have employers who offer some 401ks and IRAs or the SEPs. See, these are different things. You may not know what the acronyms stand for, but those are things that you need to understand and know. So please, please, please educate yourself on what investing is before you go and just put your money into something that you may not get that healthy rate of return that you're looking for to get out of it.
I did have two more questions that came through. One person was asking about, there are some people who invest their own money, like they do their self, like personal investments, not necessarily utilize a third party. Do you have a preference or maybe a recommendation on whether you should do your own kind of investments, or should you use someone else who's quote unquote well-versed into investing other people's money?
Okay, well, personally, if it were and I've never invested anything, I would want to get with someone who was knowledgeable about it. I would ask questions. Sometimes you can get a mentor. I would talk to someone, and I wouldn't just jump into it. I would kind of do my research and observe and try to see whatever it is that I'm interested in. I want to have a background in. I want to do some type of research to find out what it is. You want to know what your risk tolerance is. Are you willing to take a risk to lose money in case you may need that money for something, but you're saying, okay, I want to double this money. are you okay with losing that money if you invest it? So you want to know what your risk tolerance is with anything. You want to know how much money you have, because sometimes some investments cost, you have to have a minimum amount that you invest in there. They may require you to purchase 100 stocks before you invest it, and that stock may be worth $10 a piece. So do you have the amount of money set aside to invest that money in? You want to know how much help you will need. The do-it-yourself investors, we can look at that and say, okay, I'm looking at it, I can just go on and invest my money in here. But there may be some things on the background end that you may not understand, as far as like the company risk over a period of time. Did you research and see how much this company during this specific time of year, did they lose this amount of money? Or did the stock go down for this in this period of time, in the time frame that I'm investing my money? You want to know those types of things. Which is a good time? What is a good time to invest in this particular thing? So those are things that you want to do. I would honestly recommend getting with someone who has experience in investing before I would just invest my own money myself without understanding and knowing what I'm investing my money in.
Awesome. And then the other question was, for the people who have a fear of like using banks to hold their money, is there a possible first step that they can go? Because obviously they can't necessarily go wholeheartedly putting all their money in other people's hands. But is there like some kind of small step that they can do to, because we're still talking about saving money, trying to increase your financial wealth or become financially healthy. Is there a first step that they can take towards eventually investing or just saving money in general outside of like, their mattress at their home, however their system is?
Right. So I know some people, and we do, and we've talked about this in some of our previous Financial Fridays about budgeting your money and making sure that you're saving your money in certain ways. And I understand about, I'm not used to going to a bank or putting my money all in the bank to just, make me money. Because of course, we know that there are some traditional banks that don't offer a high rate of return on money that's invested. And so a lot of times there are people who use online banking systems because due to the fact that the overhead cost is lower with the online bank, you tend to get higher rates of return when you put your money into an online savings account. There are credit unions. There are alternate places that you can go. Credit unions are one of the other places that I would recommend looking into, because most time when you put your money in a credit union, you are becoming part owner of that credit union because they invest a lot in stocks. Again, I would get with a financial planner or advisor or someone who's certified investor to look at other ways that I can place my money into a type of institution that I feel comfortable with, instead of just leaving your money in your mattress or in your pillowcase or somewhere stuck in a safe, not making any money for you. It's a good thing on one hand, because if you're disciplined enough to put your money in there and not touch it, that it takes discipline. So that's a great thing. But if you want to see a return on your money, then it's good to get with a financial advisor or someone, a financial coach, that could tell you or guide you into the right direction to make sure that you're putting your money in a place that you're comfortable with and that it's going to give you a great rate of return of what you're looking for. And like I mentioned about the CDs, if it's a long-term goal or short-term goal, you want to look into that. If it's a CD, they do it based off years, 1 year, 3 years, 5 years, some 20 years. It just all depends. But if you want to put a down payment on a house, and I want to invest this X amount of dollars, and in 5 years, I know I have this double, then I know in 5 years I will purchase a CD and leave my money there and have that rate of return in 5 years. That's my plan.
Awesome, thank you. And I think the biggest takeaway from today is more so making sure that you're researching and you're understanding what you're researching, and then also asking for help or advice from other people who already have experience within this form of, saving and gaining more money.
Please do. And I would also, I know that social media has really made this a big thing for a lot of people. And there are a lot of people on social media saying, I'm a Bitcoin expert, I'm this, I'm that. Not just Facebook, but social media period. But you will see those types of posts. My advice is to get with someone that is local, that you can communicate with, that you can talk to, and that will return your calls. Do not, please do not get in the inbox or DM and communicate with someone that you have no knowledge about and have never seen. Personal relationships are great, are good when it comes to your money. You want to make sure that you can go and get your money when you need to get your money, or have access to your money at all times. You do not want to invest with someone you do not know. They will take your money and run. And we don't want that type of risk.
Exactly. And I love how you said you want someone who's going to return your phone calls. So that's it out. That's it out. Thank you so much for leading today's conversation about investments. Next week, based on everyone who's been submitting the polls and stuff and questions for what they want to do for topics, next month we're going to be discussing credits and credit reports. How do you raise your credit? If you don't have any background in credit, exactly what it is and things of that nature. It's important for so many other aspects of what we want to do for our lives. So it's going to be awesome. Did anyone?
A great topic. Those are things that I'm actually working on right now. So that is great. I'm excited about that.
Awesome. Did anyone have any questions before then? I guess without further ado, then this concludes Ask Me Anything for this month. Thank you so much for attending today.
Thank you.